The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 16th fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a restful night's sleep, especially those that are stranded on the islands that were created yesterday in the New York Stock Exchange, in the diamonds, and inside the spies. It is fantastic Friday. You know, and the best way to start our day is to have clear outcomes, which is why my outcome for the next hour is to teach you how to master the tools for trading. And that includes the tools of the mind, because when we master the tools of the mind, well, we start thinking like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD and swing points and Gartleys and various candlestick signals that the bulls and the bears, what I call the sign makers of the markets, what they are forming for each of us each day. And we're going to use these signals, what I consider to be tactical tools, market tactics. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. That's what I call mastering probability, and that's where I come in, because using tactics without strategy, well, that's a recipe for failure. And failure, it is simply not an option in my playbook. Instead, you and I, together, we will think like a strategist, because strategists, guess what, folks? They slay the tactician all day long out there. Now, the foundation of any strategy, well, it's a strong mind. So let's take a look at one of our tools, the tool I call developing your own model. You know, success is a very personal thing. For some people, it means money. For others, it's love. For many of us, it's simply happiness. Yet success is something that each of us must define for ourselves. Otherwise, how will we ever know if we've achieved it? So what does success mean for you? Write that down on a piece of paper. If you don't have that well defined, what does success mean for you? What is it that first pops into your mind? In fact, put that on your memo pad, on your phone. For goodness sakes, use the real power of that telephone. It's that memo pad. You know, like all good recipes in life, there's a secret ingredient, and I believe the secret ingredient for success, well, for defining success in that formula, is nothing more than having an open mind to alternatives, which is the same thing as learning to appreciate the other side of the debate. Something to think about. You know, in trading and investing, it's what we refer to as understanding both the bull and the bear position. And we're going to do that this morning as we take a look at the markets. You see, the secret ingredient is listening to a variety of opinions and reading a variety of books before you make up your mind, because no one speaker, no one talk show host, no one book, no one individual has all the answers for us. Instead, take advantage of all that's available to you. Be eager to learn. Be eager to learn no matter where you are in your journey. Take a person's knowledge, but don't take it as the only knowledge, and develop your own model. It is Fantastic Friday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here right now. Dow futures up 2 points, trade out at 16,425. S&P up a point, trading at about the 1869 level. NASDAQ futures up 3.5, trading at 35.67. Russell 2000 up about a point. King dollar up 3 pennies, trading out at 80.10. We've got Goldilocks back $2, trading at 12.91. Silver back 16 pennies, trading out at 19.32. Light sweet crude up 34 cents, trading out at 101.84. Our call-in number is 877-927-6648. Feel free to give me a call. Happy to look at your stock chart. A quick peek across the globe out here. The DAX down 23 points in Germany right now. The FTSE is flat. It's off 1 point. Nikkei last night down 200 points, off 1.4%. Hang Seng off 18 points, and the Shanghai was flat. Of course, the news of the morning is that Red Lobster is going private out there. Red Lobster, that's a company that was started, actually the first Red Lobster restaurant opened in all places in Lakeland, Florida, of all places. It was started by, it's Darden Restaurants. It was started by Bill Darden and Charlie Woodsby. In fact, if you're ever in the Orlando area and you're looking for a good steak joint, don't go to Ruth's Chris. That's a bad steak place. But go over to Charlie's Steakhouse. Charlie's Steakhouse and go to the one that is on it's on Orange Blossom Trail. It is a great place for steak. Now, I actually like going there for the lobster because the way that they grill that lobster, oh man, that is a good meal. In any event, you don't want me to be talking about Red Lobster all day, I don't think. Although if I spend too much in the time in the sun, I begin to look like a Red Lobster. Let's go take. So if you were listening to the show, I was luckily fortunate enough to be able to fill in for Tom last night from 4 to 6. And, of course, what I indicated is just how bearish the market became yesterday. But that didn't mean that there wasn't going to be a bounce. In fact, I suggested that there would be a bounce this morning. We'll see where that bounce will take us to. In fact, the most bearish outcome for the market today would, in fact, be a market that closes higher because it is likely going to do that on light volume out here. So where do we begin our day? Well, on the charts I got up right now, they're the intraday charts here. One of the reasons why I was suggesting that we would see a bounce out here was the Euro-Japanese yen, the 120-minute chart out here. And as we take a look at that's the first chart that's on my screen. As it was making a low at 7 o'clock yesterday morning, I got down into the oversold condition using the 14-period relative strength indicator. Got down to a low of 139.47 RSI reading, about 27.41. And then what happened over a period of time up until about now that was 7 o'clock in the morning. My apologies, on May the 14th. Then yesterday at about 11 o'clock in the morning, we had the Euro-Yen make a lower low. Got down to a price point of 138.96. As it was doing that, the relative strength indicator reading on that was 35. So it was a higher RSI reading. That means we had a bit of a divergence. We had a lower low, we had a higher high when we take a look at that RSI. And then more importantly, we had what was considered to be a key reversal session coming from an oversold condition inside of the market. Now what happened here is we also had a couple of hammer candles that had formed in the two ensuing 2-hour sessions out there. Those levels were actually broke this morning. But as they were broke this morning again, even with a little bit of a thrust here down at 7 o'clock in the morning, RSI reading being at 30, still higher than that low that came in back at 7 o'clock in the morning on May the 14th out there. So not enough energy, not enough juice here yet in order to be able to push this currency pair down. It wants to, but what it really needs to do is just like at the times when you might overeat. That could include going to Charlie's Steakhouse. That certainly could include going to Red Lobster, going to Olive Garden out there. After all, they give you an unending salad. Of course, it's not usually the salads that will fill you up. It's all those bread sticks and bread rolls that are out there. In any event out here, those conditions when you overeat, you just simply have to work that off. And that's really what a market does here is the markets are going up and down. If you take a look at, there's different intraday time frame charts that really help you to understand why the market's taking a rest or it's breathing. It's like running a marathon or running a race out there, and you just simply can't continue to go nonstop. And so that's really, in essence, what we're seeing. So the most bearish thing that could take place, and I know the question is going to be, well, where's it going to bounce to? So let's take a look at a number of different tools out here and see where the market could bounce to. If we take a look at the S&P futures now, and we can see, in essence, it's made a 100% move by getting back to the swing point, 120-minute, 2-hour chart that we're looking at. That's 12 noon here. That's on May the 7th. So price came down there. Big wide-ranging bar, by the way. In the top of that wide-ranging bar could be the first place to be focused on. That price point, by the way, is 1874. We'll see if price can actually get above that. But if we just use our natural Leonardo Fibonacci numbers out here, 1874 happens to be what? The dead cat bounce. So that's going to be really the first target area where the ES Mini is should travel to. You're at 1871 right now, so about another 3 points. Should do that before the floodgates open here inside the markets. Maybe at that stage here at 9:30, that's where you start to see some selling, but maybe that's just setting up an A to B equals C to the upside. The most logical area for where the ES Mini would travel to is probably more likely in that 1883 area, your 0.618 retracement. Now at 1883, that's about 13 points higher than this, and it's a potential. At that stage, everybody's going to say, hey, the selling was over. It was just a one-day deal out there. And, folks, don't buy into that. I mean, just do not buy into it. The most bearish of bearish patterns formed yesterday and at all-time highs. That's where, when you start taking a look at the New York Stock Exchange, the SPY, the diamonds out here, remember, those are the three, the S&P 500, the Dow, the New York Stock Exchange. Those have been the three holdouts here with regard to, they've been the strongest. That's where we've said, hey, we've got divergence in the marketplace because you've had the NQ, you've had the NASDAQ, you've NDX 100, the Russell 2000, certainly slamming down, moving down, changing their trends on the daily and weekly time frames out there. And the New York Stock Exchange, S&P 500, and Dow were saying, hey, no way. Now, as you know, I've covered this on many occasions out here, but it's always worth noting is that when markets make major tops, they don't all do them on the same day. They do them on different days, or they do them as groups. Well, the group got together. The three strongholds, the New York Stock Exchange, the Dow, and the S&P 500, they got together, and apparently, and I didn't get the memo out here, but we did sell our long positions, so I must have got some kind of memo. I must have got some kind of signal in order to do that. And that was on May 13th. And that's what is the high out here. And that's the key high, whether it is the New York Stock Exchange, whether it is the Dow, whether it is the S&P 500. The reason is because they created island reversal patterns out there. The absolute most bearish pattern that can be formed. It's not like there's confusion about what the markets are doing or what the signals are. There's no confusion at all. It could not be any clearer than what transpired yesterday when we take a look at the markets and their signals. And that's both good, both bullish and bearish. So we get back from this break here, we'll take a look at both sides of those trades and what the real meaning is behind yesterday's action out there. Anybody who's on television or radio that isn't communicating this and is saying there's not clarity, man, what is it that they're smoking out there? We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so before we went to break, really we're talking about the island reversals out there, and they just don't happen that often. In the marketplace, whether they're tops or bottoms, and they're just simply the absolute best signals out here of what the market is communicating to us. Now, that doesn't mean that it can't fail. And as I said in the very opening segment, you know, it's incumbent upon us to look at really both sides of the trade out here. Now, the cool thing is that when we take a look at the diamonds, that's what I've got up on my screen here right now. We're really not that far away from the high out here, which was formed just, 3 trading sessions ago. That was on May the 13th. The high out there is 167.29. And it's very subtle. So if you were just simply looking at a stock chart, depending on what tools you might use for looking at your stock charts, you may not have even noticed the small gap between the bottom or the low of the trading session on May 14th and the top of yesterday. But the bottom of May 14th, 165.92. The high of yesterday, 165.87. That 5 cents is huge. You know, that, do you want to talk about finding a nickel? That's important when you are walking, and, you know, some people might just pass by a nickel if they're walking down the street. You wouldn't want to pass by this nickel out here. So, yeah, you had you've got a number of different patterns, but certainly there was a small little butterfly pattern that, you know, if it were exact, if it were perfect, and perfection doesn't exist out there, it's the absolute lowest standard, so don't be waiting for perfection. 167.50 would have been the price objective of that 1.272 butterfly. Instead, price got up to 167.29 out there, so that was close enough to have that pattern. You then got the confirmation yesterday with that reversal, with that island reversal. So if the Dow Diamonds closes above 167.29, then guess what? What it'll be telling you is just how absolutely strong this trend in the market is, wherever it's coming from, whether it's coming from the euro-yen carry trade out there, where it's coming from our own treasury, whatever it may be coming from. It'll just simply tell you an absolute strong trend. And at that stage, you got to go all in bullish. But right now, the signals are you've got to be extremely careful out here. The message should be looking for short trades. And the questions are always going to be, hey, where is it that you would come in at? Now, maybe you're not short. Maybe it's worthwhile to start building a position and taking a look at different spots, take a look at some of those Fibonacci retracement levels. Certainly your stop needs to be above the May 3rd, or should be somewhere above the May 13th high. You know, the cool thing about trading and investing, when you really understand that it's just a numbers game, that it's all a math equation, and that the deal is, all you really need to risk on any one trade is 1%. You'd be amazed at how much money you can actually, when you understand the actual math game out there. It's like the math game. You know, if you got kids, just teach them to put away, you know, a couple $1,000s a year, right? $200 a month, $175 a month out there, $175 a month. Start to break it down. You know, $40 a week, $45 a week. They put away $45 a week, and guess what? and they just simply, go ahead and invest it in the markets, plug their nose, whatever, or, trade in direction. They get some good advice from someone like myself or one of the other contributors around here. They're going to be a million. They're guaranteed to be a million. The first million is the one that's the most difficult to make. Because after you make the first million out there, the way that compounding works, the first million takes maybe about 20 years. The second million does not take very long at all out there. And then the third and the fourth and the fifth, and that's really what it is that you want. So it's just a numbers game. And so the numbers game when you're trading and investing, it's really called position sizing. And it's really very simple. You take your working capital, whatever it is, and you multiply it times 1%. And that is how much money you're going to risk on any trade. On a $100,000 balance, it's $1,000 that you're going to risk on any one trade. And you're going to take that $1,000 and you're going to divide it by your stop. If you use a wide stop, no problem out there. But you've got to have the right stop in place. Look, in volatile markets, and to a certain extent, even though the VIX index is at a low, somebody might say it's not a volatile market. Wait a minute here. The way that this market has been moving since December 31st up and down, I'd have to say there's some volatility with regard to the price out there. So it's volatile. And in volatile markets, using tight stops, which is kind of like the logical thing, it is the absolute wrong thing to do out there. It's quiet markets where you can afford to use tighter stops. And when I say tighter stops, it should never be less than the average true range of whatever it is that's being traded out there. And why do I say that? Because the average true range is the normal breathing pattern. It's like asking you not to breathe when you make a tight stop out there. And you can't do that. The market has to breathe, whatever equity it is that you have to breathe. Nothing worse than being right on the trade and wrong on the stop out there. You've got to use stops. But position sizing is really the name of the game. 1% of your working capital, divide your stop by that. That's how many contracts you buy. That's how many shares you buy. When the trade starts working in your direction, add to the trade. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 3 points, trading out of 16,442. S&P is flat, trading at 1870. Nasdaq Composite up 84 cents, trading out at 4,070. Apple up $1.14 at 589. Microsoft up 10 cents. Google up 62. Leading the charge, the upside, we've got Rackspace Holdings. RAX is a ticker symbol, just up over $6, about 20% right now. Nordstrom, JWN is a ticker symbol, up 10%. Icky Bank. IBN is a ticker symbol, up 8%. Autodesk up 5%. $2 and change. This Bud is for you. BUD is a ticker symbol, up 2%, up $2. Biogen, BIIB, up a couple of bucks. Lamb Research up a couple of dollars out here. To the downside, World Wrestling Entertainment down 41% here this morning off $8 and change. Kamada Limited, KMDA, down 30%. LinkedIn off $3. Waddle & Reed, WDR, is a ticker symbol, down 4%, off $2 and change. Amazon down 2. Canadian Solar, CSIQ, off 7%, down $1.84. Let's peek in on Rackspace Holdings. So they were out with numbers, I believe, after the bell last night. Up nicely today on some pretty decent volume, but going to run into a huge supply line. Now, Rackspace Holding, and this is one of the Rackspace Holding you may recall, had been one of those nice IBD flyers. Of course, be careful on how many momentum type stocks are inside your portfolio. You do not want to get overweighted in those, because when they fall from grace, it's not a pretty picture out there. In the case of Rackspace Holding, back in January of 2013, January 24th, was when it made a high, $81.36 out here. Look, it wasn't just but a few days ago when it was trading down at the $26 level out there. Huge signs of institutional selling inside of this equity. In fact, really, it's only been institutional selling out here. The first time we've seen any kind of sign of strength that took place here back on May 13th. So we've seen a small sign of strength out there, no question about it. But you've got a fairly large, it hasn't proven itself to me just yet. It's got a fairly good supply line out here. It's areas of resistance. It's trading right now at 36.50. It's areas of resistance right around 39.45, which has not been tested. And inside the gap here, which is on March the 7th at about the 38.70 type area out here. And that is on Rackspace Holdings. So having a nice morning out there, but, hard to buy into that one. We've got the Dillard's jumping into the picture here. DDS is the ticker symbol. Maybe they were out with earnings as well. Looks like they were. They did about $111 million versus $117 million from the prior year, and sales about the same, 1.55 versus 1.55. But it's up this morning nonetheless. Let's go take a look at Dillard's. Let's go see what it is trying to accomplish out here. Looks like it's all-time highs at the $105 level, gapping up here this morning. So let's take a look at, oops, I didn't mean to do that. What I meant to actually do is put this on a monthly chart. I want to see if this is at all-time highs out here. Yeah, it is. Okay. So here's the cool thing about this morning's action and with regard to the island reversal pattern. So, what you want to be doing now is start taking an inventory list of stocks that are, high-price stocks. $100+ is really your preference area there. And you want to start taking a look at them and try to start finding some potential bearish patterns out here. So you've got Dillard's, DDS is the ticker symbol, gapping up here this morning. You'd like to see it stay above the 100.63 area. And then watch it to see if it will form an island reversal pattern. If for any chance, you've got a market that starts cascading to the downside, you're looking for the island reversal pattern. Such a cool pattern out there. You talk about the reward to risk. It doesn't get much better than that. Now, in the case of Dillard's out here, let's go see what kind of pattern it's actually forming. Let's look at expansions of its last sets of swing points out here. The December 24th high, which was at 96.82, down to a high volume low that has not been tested yet, and that's down on February 24th. That's at 82.75. So it looks like it wants to make a move to the 107.46 level, your 105.99. That'll be your 1.618 area. That will set up, what looks like this. It looks like a butterfly pattern. I can go ahead and draw that in here, I believe. Let's try this here. Butterfly pattern right around this area right here. That would be, now it does not mean that that's where price has to stop, but it doesn't mean that this is really going to turn into any kind of a bearish pattern out here. But when you see things gapping up at all-time highs, these are the kinds of things you want to just, put the ticker symbol DDS, or if you've got some type of stock chart, just continue to follow it to see if it gives you, some type of reversal signal. Now, what it should do when and if it does fall from grace out here, it ought to get down and test the 82.75 level out there. It's trading at 105 even Steven right now. Let's take a look at Nordstrom. JWN is the ticker symbol out here. JWN. That too gapping up. Let me just make sure I refresh my screen out here. Now this one is in the $68 level, so that certainly qualifies as one to be taken a look at. Let me just get rid of everything on my screen. There we go. Now, is this thing at all-time highs as well? Let me put this on a monthly chart real quickly for us so that we can take a look at it. Yeah, it is as well. So let's put this on the daily. So hopefully you're writing these down here. You've got JWN, DDS as two that you want to be paying attention to. Now, this has been in a consolidation pattern. So let's take a look at what the measured move is likely to be in the case of Nordstrom's out here. Here's the consolidation pattern that it has been traveling in. When you break through a consolidation, your move is going to be equal to or greater than the consolidation. Typically, that's what you should expect out here. So if we take a look at that, let's just go add the consolidation to this area here. And that would say that Nordstrom's wants to trade up maybe to about the $71 area. Nonetheless, you want to go ahead and pay attention to this, because if for some reason the markets really crater futures-wise and Nordstrom were to gap down, you'd be creating an island reversal candle at all-time highs. And those, again, they're hard to do, but they are about as bearish as you can get when you take a look at just simply tactical and strategic moves when we take a look at the stock charts out here. Let's go take a look at Autodesk. ADSK is the ticker symbol. Haven't looked at that stock chart for a while out here. It's trading out at $50 and change. It gapped up this morning here, not creating the type of island that we saw yesterday that was created in the SPYs and the diamonds, and what may be forming in the other two stocks, Dillard's and Nordstrom's, that we looked at thus far. But in the case of it's got a high. It doesn't have a high volume high, pretty close to it. And hard to say because there was a lack of wide price spread on the trading session on February 27th. That really qualifies as volume off the top, but it does have volume out there. We're looking at Autodesk. Not really too shabby. This thing had a nice sign of strength back here. Looks like back in August of 2013. If we take a look at retracements, just simply, it has certainly had a key reversal session back here on the trading session of February 24th. So that key reversal session was certainly. Now here is a bit of an island bottom that actually formed that failed. So you can see when they fail, okay, in this case here, this is Autodesk, so it's a great example, and why we took a look at why I said if the diamonds or if the SPYs close above, and as well the New York Stock Exchange close above that May 13th high, that is going to be very bullish. So that's the coolest thing, is that when you have one of the strongest bearish patterns out there, and if it fails, it gives you a ton of information. So that's looking at the other side of the trade. And if it works, which right now you have to assume that it works, because the preponderance of evidence, the probability is that it will, in fact, work out here. In this case here, Autodesk created a small little island. It was back on March the 3rd. It failed, and price continued to move lower. We take a look at what it's done thus far, almost gapping up into the 0.618 retracement level, which is $51.69. Hasn't made that. It made it up to about $51.22. Pretty decent volume thus far, about 1.2 million shares, and that is on Autodesk, ADSK. Let's go take a look at World. I don't know what's going on with World Wrestling Entertainment. Let me change tabs out here. I thought they did a deal with NBC or something along those lines, but nonetheless, it is just getting hammered this morning. WWE. Maybe the deal fell apart or something, but let me see if I can find any news out here. Maybe somebody in the den knows something that I'm not able to see in just 2 minutes of time. If we take a look at it, though, trading down with massive volume today, WWE is the ticker symbol. Man, oh, man. I don't know where this thing is coming back to. How about this? I mean, you're talking about massive volume. What the heck is going on with this? So W estimates net income. I don't know what the news is behind this stock, but it's just being thrown to the mats here. What is one of those wrestling moves? When you bounce off of the ropes there, and then and you slam into the ground. What is that called? What is the swashbuckle? What is one of those moves out there? Come on, there's got to be some wrestlers in the Tiger's Den. In any event here, this one is doing. I have to just go to a reference of diving, which I've been known to go off the high board occasionally, and every now and then it's turned into a belly flop, and that is certainly what we've got going on here in WWE. Trade out at $11 and change with volume. I don't see any stock splits or anything along those lines, so that thing has truly been taken to the mat out here. Let's take a look at Kamada Limited. KMDA is the ticker symbol. That's down about 31% here this morning. That also being thrown down to the mat. Give me a moment here. KMDA. Give me a second here. Give me a moment. So this thing is down with major volume. What is behind this move here? Maybe this is a okay, so looks like a phase 3 failure drug or what have you. So this thing is, how about this? This had a IPO, takes you back to May 31st, 2013, about 3 million shares out there. That day priced out, traded between $9.60 and $10.25. Made a nice run up to the $18-ish area right here. February 27th gets up to $17.95. Now, no real volume traded in this equity. 20,000 shares, 50,000 shares, 28,000 shares. Well, today it's already done 317,000 shares. So this does not look good. This is Kamada Limited. Let's take a look at what do I want to look at? You know what we'll do? Let's we only have about another probably 8 minutes worth of airtime together. So let's start taking a look at some weekly charts out here. So the daily charts convincingly have given us a bearish reversal signal out here. What is it? There we go. So they've absolutely given us a substantial bearish signal yesterday. If we take a look at the weekly chart, I've got the ES Mini up on my screen, but let's just change this over to the actual indexes here. So let me do that. Let's go take a look at the S&P 500. Right, the week's going to come to an end. What is it that we're looking at? Has a change in trend here on the weekly taken place just yet? No. What we do have is we've got also on the weekly chart one of those bearish patterns, price relative strength divergent pattern, and we've had a couple of them. out here. We've seen a reversal. We had a, let me get my cursor out here. Makes it a little bit easier. We had a shooting star pattern that took place on April the 4th, the week of April the 4th, had follow through the very next week out here. That shooting star is going to hold on a weekly basis as a resistance area. That's the high. What we have here now forming at a doji candle last week. That doji candle says what at resistance? It says a lot with regard to resistance out there. Not just that the market is tired, but dojis at resistance have a lot of meaning. This week here, any close below last week's open 1879.45 is another, and not only is it just a bearish engulfing, but you're getting a ton of topping signals out here inside of the S&P 500, and inside the SPY we know on the daily basis we got what? We got an island reversal. Look, the high here, if the highs get taken out, the highs of this week, then I just simply will change course and say, you know what, here's what the message of the market is. To me, it's not personal. It's about just simply reading the message of the markets. I recognize that I'm going to be right on trades and wrong on trades. The key is money management and then being right on more than you are wrong out there. And it is just, if you could just teach your kids that game. If, you know, sometimes maybe you don't utilize some of these important principles out here for trading and investing. But I ask you this, you know, if you don't use stops or what have you, what's the advice that you would give to your kids with regard to managing their money? Would you give them different advice than maybe you actually use in your trading and investing out there? Wouldn't you like to just be able to teach them the money game out here? I mean, that's the game that they need to be learning how to play. It really isn't that difficult. So that's the S&P 500. Let's take a look. Let's go take a look at the New York Stock Exchange. Let's go see the wider swath of the market. What kind of signals on a weekly basis, if any, that we have out here. And we've got a bearish engulfing candle, a shooting star, really same setup as we took a look at on the S&P 500 out here. So you've got, again, on the New York Stock Exchange, you've got the daily signal with regard to a reversal on a weekly basis. We now have a price relative strength divergent pattern that is out here. Let's take a look at the Dow. Let's go take a look at the Dow Jones. Let's go see what type of pattern on its weekly chart might be out here in the offing. And here you also have a price relative strength. So you got the same patterns here inside on the weekly, on the daily. When we take a look at the Dow, when we take a look at the New York Stock Exchange, when we take a look at the S&P 500. Dow's off 5, S&P's down 2, composite down 15. We'll be right back. Looks like we're going to go to Pete in Long Island when we get back. He's got some information for us on WWE Worldwide Wrestling. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Markets are relatively flat out here. Of course, with a name like Rhodes, you know, you got Dusty Rhodes, one of the great famed wrestlers out there. And, you know, as a kid growing up, probably you might have done this with some of your buddies as well, you know, wrestled them. Now, the only positions I can remember is getting somebody into a scissors lock and then give them a little noogie, you know, and you rub your knuckles over their forehead out there. But I don't remember some of those wrestling terms out there, you know, when you put somebody in the turnbuckle. Maybe our man Pete in Long Island knows what some of those terms are. But Pete, thanks for calling. Thanks for holding. How you doing this morning?
Well, thank you. Worldwide entertainment, WWE, is down on 15.5 million shares. It's down to 1070. And the reason it's down because the deal that was announced with NBC Comcast,
yes,
for the next few years for this company has been a big, big disappointment. And what happened is because of the deal's announcement and, you know, what's involved, we have eight downgrades this morning.
Oh, okay.
8 downgrades of the stock, and the institutions are unloading, and there's some margin calls in the market. And this stock probably sometime today will probably fall down to about the 950 level. And you also had insider selling recently. So
did you?
The technicals are terrible. I mean, we're down 930 right now on almost 16 million shares.
Yeah,
so
I'd say
8 downgrades. But if you look at the announcement regarding their sales, and TV is everything to WWE, you know, the contract, that's where they make the money. It's been a big disappointment. They expected a lot more out of this deal.
Well, the stock chart, as you pointed out, does not look good, and the volume in it is pretty substantial this morning. So it is. They've thrown it into the turnbuckle. Maybe it's been a brain buster. Maybe it's been a backbreaker. I don't know what the term is. Oh, maybe it was the pile driver. Wasn't that one of the? Did you ever watch wrestling as a kid?
I used to watch Bruno Sammartino. You remember Bruno?
Okay.
And he's still in great shape. He's about 82 years old. But
I love it.
That was my era of wrestling. I haven't been keeping up to date with my wrestling figures.
Yeah, me neither. I think there was something called the pile driver. So that thing, WWE, it's been pile drive to the lows. Hey, Pete, thanks so much for updating on us on that.
Thanks,
Have a great weekend.
Keep up the good work. Have a wonderful weekend. Bye for now.
Alrighty. So, folks, as we round out the session here today, and stay tuned, we got the Nadex Bull Bear binary option hour out. If we take a look at the VIX here, trading up just a bit. You know, the 50-day exponential moving average, you want to keep your eye on that. That's priced at 1387 right now. Look, it could not be more clear. Clarity is a wonderful thing to have, isn't it? In a market that just had been kind of drifting up, is it going to make a top? Is it not going to make a top? I can tell you with certainty. And certainty is not a word often used inside the market. I can tell you with certainty that the candlestick formations that were made on the daily charts in New York Stock Exchange, the SPYs and diamonds, are as certain as can be that a significant event took place yesterday. And right now, and until those highs are taken out, that event is that you're going to see a pullback. Now, is it the end of the end? Is it the major top? That much I don't know. But what I can tell you is that what we're likely to see prices inside those indexes, inside those ETFs, probably pull back to the 200-day exponential moving average of what that was priced at on the trading session of May 1st out there. That's what typically happens when markets make a correction during the 6-month unfavorable seasonal cycle of sell in May out there. So go check out your stock charts or stay tuned for the rest of the day here at TFNN. Our man Tom O'Brien, Daryl Martin, they'll be up next. Have a great weekend. I look forward to seeing you on Monday morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.